Here's 3 bits of accounting advice for every business owner. Watch on. As a business accountant, my team and I spend all day long helping business owners on their journey. And of course, one of the key things that pops up is, what should I generally be doing? What's the kind of 3 top things that I should be doing? And I thought, do you know what? We haven't actually done a video on this. I think we've probably recorded podcasts and maybe even written blogs on it, but we haven't actually recorded a video. So in this one, I wanted to talk directly about 3 generic things you should be doing for every business owner to kind of get on top of that accounting and tax and help that journey. It's, you know, quite a wide topic and you can take it to whatever kind of degree you want, but I just wanted to talk to you about the absolute basics. You know, what's 3 strategies you can take away to really start on that journey. Now, before we get into it, if you like these type of videos, be sure to click the subscribe button and the bell below so you get notified whenever we release more videos just like this one. So then, where to start? And if you've listened to me talk about any of these things before, you may have heard this one. And that's, I always say to people, keep good records. The first thing we always get asked is, how do I save more tax? What's the #1 tax saving tip? The answer is always keep good records, because busy business owners, you're going to forget things. You're going to pay things cash. You're going to pay things on your personal card. You're going to miss tax deductions because you just didn't have it in your records. Now, whether you're in a cloud product like a Xero or a QuickBooks, one of these accounting apps that keep everything together in the cloud, in the internet, or whether you're actually a spreadsheet person, or whether you're still a manual records person, there's a chance you're going to miss things. So you want to make sure you're keeping good records. And there's plenty of videos we've done on that. With using technology would be the biggest thing, particularly receipt capture. So if you're out and about doing traveling for your business and things like that, having an app that you can snap on your phone and sort of forget about it until you go back to the office or back to home office and sit there and kind of bookkeep, or if your accountant's doing it, they get it. Having that receipt capture is going to be a really big thing. So that's going to be one way to do it. But however you do it, just get yourself a system so that you can keep those records for tax deductions. And then for the business improvement and general accounting, you're going to want a base of figures to review. And we're going to talk about that in a tip in a minute, but you're going to need some figures and some access to numbers to really help you. And this starts with good records. It's that whole, you know, if you get rubbish in, you're going to get rubbish out. And if you're making business decisions on rubbish, then that can potentially be quite catastrophic. So good records, keeping them is #1 for sure. Now, the second one you're actually already doing. You're educating yourself. You're improving your knowledge around tax deductions and accounting. And it sounds kind of obvious, but the more that you know about this stuff, the better it's going to be ultimately for your tax bill and for your business. Because knowing and being in your head, you know, this is tax deductible, this isn't, will help you make some better decisions. Because ultimately, in an ideal world, everything you buy, you'd want to be tax deductible. There's a real efficiency to that. And as business owners, there's certain efficiencies that are there for us to be able to use. Sometimes you might have something like your business, your limited company could provide you with a mobile phone, and that's fine and it's tax deductible, and you were going to pay for that anyway, but you needed it for your business and your business contracted it. Like, there's a lot of detail in this, but I'm just giving you an idea. That's going to be tax deductible and improve ultimately your kind of take home pay as an owner. So those kind of things are really important, but knowing what can and can't be done is really crucial, both for the positives of that kind of efficiency we're talking about, but also for avoiding the negatives. We see so many times we look at an owner's records and they've put, say, clothing in. And again, we've done plenty of videos on clothes and some of these kind of problem areas, but in a lot of cases, clothes aren't going to be deductible, and you see owners claiming them. They're claiming VAT back on them if they're VAT registered, and all these things that are a problem, and your knowledge of that can avoid those problems and those potential penalties. So it's both good and bad, but knowledge is where it starts. And as you're already doing, you know, listening to things online, listening to things that are available, with always, and I know it's ironic because I'm the one talking to you about it, but be careful about where you're getting your information. Be sure you're confident that those sources are well resourced and up to date, because these things change constantly. You know, you see all the books behind me around tax law, these kind of yellow ones. The whole combined tax law is over 20,000 pages, and the court cases layer on top of that. So knowing what happened in a court case this week could change previous advice. So you want to make sure whatever the sources are, it's kind of a good one. Obviously, you got direct with HMRC. That's their view on things, and that's always a good one to kind of keep in mind with, because, you know, you've got some good sort of barriers, sort of training wheels on what you should be doing, but there you don't know everything. Good example being influencers at the moment. There's very little case law on what influencers could and couldn't do. So when advising on that, you have to take into account like a lot of different case law that's similar. and make some decisions on it. And of course, the HMRC guidance is not going to be crystal clear in those areas because it can't be, but that is a good one. And then there's other resources, like there's the Low Income Tax Reform Group. I know it's a mouthful, but they do some great guides on their website. And of course, healandassociates.co.uk, our website for a lot of blogs and content, the podcast, this video. Just surround yourself with that small learning in small chunks, and hopefully you'll be kind of better in the picture. And if you're reading these things, you may find you might even be better sort of clued up than some of the professionals you're working with, and that, you know, should be a bit of a red flag, but it will be a good kind of grounding to know about these things. It will ultimately help you save tax. And then the third one, I think, is quite tough. It's quite tough. I mean, we're talking about educating. I mean, keeping good records once you get a system is relatively straightforward to do. You know, when we're talking about educating ourselves, that's a long-term game, and you can, I think some people like learning, right? A lot of people like learning, so you can absorb that, and that could be quite fun. But the third one, I think, is more difficult because it's numbers-based, and that's really understanding some numbers. So I think we've done videos on how to get going on this in terms of like daily habits, weekly habits, that kind of thing, of what should I be doing. But the first thing you're going to need access to is regular numbers, and that's a big action point. You want to get hold of regular numbers. So we said keeping good records. That could be a spreadsheet. Ideally, it's in one of these cloud products because you can go to report. Particularly the one I'm thinking of for this is the profit and loss report. And it's obviously based on your bookkeeping that you've done, or if someone's doing it for you, their bookkeeping. And you'll be able to see some figures and some numbers around your business. And regularly reviewing that and seeing where you are is a really big thing. Particularly then you can start to pull out key numbers. Now, I think there's probably 6 or 7 really key numbers in a business, but I'm just going to give you 3 for now that I think is important. That's obviously sales. Everybody knows that one. You know, you're going to go out there and you're going to look and you can see how much money you've taken. The big one with that to make sure is that you're actually taking into account, if you're VAT registered, you're looking at it without VAT on. And if you're getting it in from a payment service like a Stripe or a Go Cardless or a Klarna or any of these things, you've actually taken into account what the money is before they've taken their fees. That one's a little bit complicated to explain, but just making sure that, and this is the kind of thing you'd be looking at when you're looking at these figures, is that the true sales figure? And if you've got it in something like a QuickBooks or a Xero, you can compare that figure versus, say, like, I don't know, your gateway at their end in the Stripe end, and see what the 2 figures are, and just make sure they're looking right. But either way, you're going to want to know about that. You're going to want to know about gross profit, which is kind of the profit you make after you've provided the service. So if you sold chairs, you would have all your materials that you bought the chairs, maybe the labor that went into, if it wasn't you personally, you know, you paid some people to make the chairs. You'd have that. You might even have the delivery, and then what's left is your gross profit. And that figure's magical in business, and it can really make some differences when you concentrate on improving that. And again, we've done a lot of videos on that, but knowing that gross profit is important, but knowing what it is as a percentage. So you take that, you divide that against your sales figure, and it gives you a percentage, and tracking that percentage, and you want to see that it's going up or at least staying the same, you don't want to see it going down, is absolutely critical, and I'll explain why in a minute. And then after all that, after you've paid all your rent and your telephone, your accountants, all those things, you have your net profit, and that bottom figure is really important. Again, I like to track it as a percentage, so same maths, you can stick that in a calculator, divide it by your sales figure, and it gives you a percentage, and you want to track that and see how that goes. And then you can start to make some decisions about whether you're actually doing well as your business hopefully grows. Now, if I had to say what's the number one reason why small businesses fail in our experience of working with them, is it would be that people don't monitor when those things go down. And it's like you get this creep. Your prices from your suppliers go up. You know, your telephone bill goes up every year. Everything goes up. Often small businesses don't react, or they don't look for efficiency savings, or how the use of tech, investing in technology, might help them to up their gross profit. Or another figure which I think is quite important when you start getting a team, something where you look at how much revenue, how much sales do you make per employee for your company. Those kind of things can really make big differences to your profit. So, but anyway, for this, start simple, get your good records and have a look at your profit and loss and look at those 3 figures: sales, gross profit percentage, net profit percentage. They call them margins: gross profit margin, net profit margin, and start measuring those and just looking at it frequently. And you're going to start to have an idea of how you're doing. Are you progressing in the right direction? I think that's absolutely something that every business owner should be doing relatively regularly. And that would be my top 3 things. So quick recap: make sure that you're keeping good records. You're going to need them. You're going to need access to regular figures. Make sure you continue to educate yourself, which you're already doing. And then for me, making sure that you sit down, diarise regularly to review your key numbers. Start with the 3 I mentioned, bring up your thing and have a look. And if you need help, you need to seek assistance with this. Go and find an accountant that you can work with. Go and find, I don't know, somebody that's been in business that knows at those figures. It doesn't have to be an accountant. It could be a business coach, could be a few different people, and just chat about what they mean, because I think that is really difficult. We could do entire videos about interpreting the numbers. We train for years and have years of experience kind of seeing what these things mean and the impact of them. But I think just understanding where you are and seeing if that number goes up or down will put you miles ahead of just generally people that do this and don't look at anything other than the cash balance in their bank. If you have had any experience with this and you've had positive results, please do drop it in the comments. I love reading those and seeing the success stories of businesses, and please do share this with anybody you think needs to know this information, and I'll see you on the next one.